this is the back to school, I'm gonna fight COVID crew. Good morning. Good morning. Guys, thank you so much for coming on behalf of Cherokee Mortgage Company, all of our loan officers and all of our team. We just want to say the word of the day, write this down, write this word. Gratitude. All right, we're very thankful that you guys came to the class, and I want to, this class is one that's we've done in the past. It's very near and dear to my heart because the main reason is because we get to introduce you to our team, all right? So I'm very clear, we are, our loan officers all have a great team here. Today, we're going to walk through we're going to take a peek behind the curtain on the mortgage process. Raise your hand if you've had a bad mortgage experience in the past, we'll call it 60 days. Raise your hand. Some of you are new, some of you are brand new, and you're like, no, I haven't had that happen yet, but you're doing it. So raise your hand if you've ever heard a loan officer say, yeah, well, the underwriter just didn't like our conditions. Raise your hand if you heard that excuse before, right? And so our goal today is to walk you through the journey of a mortgage loan to tell you what actually really happens behind closed doors. Right? And so I also see some very experienced people. That's off to you guys because you never ever want to stop learning. We're gonna jump right into it. When I started in my career, I'll tell you some pain with you. We're in our loan officers, but I remember being and doing my loan application and running back there and doing my loan application, not really knowing what I was doing. Right, there wasn't a lot of training for loan officers back then. It was like, all right, here's your cards. Go get some loans and bring them back. And I remember coming back and I didn't even know really what a processor was. I didn't even know what an underwriter or closer was. We're out getting loans. And I remember doing a loan for a guy one time and bringing it back, and the processor comes back and throws it back on my desk. You missed these 4 pages. You got to fill this out. Right? Don't turn it in. Don't turn it in at all. So I share that pain with you because I didn't know the experience, but I was very fortunate enough to have people around our team that knew what they're doing and to guide us. Okay, so that's what today's about. There's no one on my team that's going to throw a file back on their desk or yell at anybody. They all have servant's heart, but they are very good at what they do. So we're gonna take a walk through it. So as we start off, okay, so we're gonna there's a handout on your desk, all right, and we're gonna go through a couple different stages of the loan process. We're gonna go through the pre-qualification and pre-approval. All right, how many of you know that pre-qualifications and pre-approvals are exactly the same? They're not, right? Exactly. So we're gonna go through the pre-approval, pre-qualification. To my left, I have Maddie Cox. All right, Maddie Cox is one of our newest mortgage loan apprentices. She is hitting the ground running. She's probably one of the most talented mortgage loan apprentices we have. She got fully licensed in what, 4 months?
3.
3 months? 3 months. She keeps me alive as well too. So, so she got licensed in 3 months. She comes from a real estate background. She's got a servant's heart, so she's going to walk us through the pre-qualification, pre-approval, what happens really pre-qualification and pre-approval. To my left, it's her birthday today, by the way. So Happy birthday. Happy birthday. Happy birthday. She's agreed to teach on her birthday. I took her to the court training. I took her to the court training one time to help me teach a team captain class in front of about 100 people you didn't know who they were whatsoever. So appreciate you doing support. She is what's called a mortgage processor. All right. So how many of you heard that the processor hasn't got to the file? The processor needs more things, or maybe the client says this processor just asked for too many docs, right? So Bev has the job of putting the file together. Her #1 job is to make sure we close on time, which is a hard one. And we've been together for 10 plus years, working together. She does an awesome job. To my left is Sayla Berry. She is our regional underwriting manager. Want to get it for Sayla? Regional underwriting manager, and she's homegrown. So she started with us 7+ years ago. She was one of the ones that used to go to team training like Maddie just went to and learning as an LOA. So she does a fantastic job, and super lucky to have her. To her left is the mortgage closer. She helps you get your loan docs. How many of you had problems getting your loan docs? Not here necessarily, but And it's Karen Griffin. So she does an awesome job. I will tell you, none of us are professional speakers. We all may be a little bit nervous up here, so give us some grace as we go through all this, right? So we'll just tell you what we do. We'll tell you hopefully what not to do as well too. So let's start off with the pre-approval, pre-qualification process. So we'll start off with this. So it's interesting to me when you talk about pre-qualifications and pre-approvals. I first want you to look at your handout and look at we're going to preface this whole timeline off of a 30-day closing. Okay, 30-day closing should be pretty typical for a mortgage company to do. All right, and so I put some time metrics down there for 30-day closings and a 21-day close. All right, it's always interesting when realtors or clients come to me and say, hey, can we close in 21 days? We can close in 21 days. All right, the fastest we've ever closed a deal bad was probably what? 9 days. 9 days. We closed a deal in 9 days. All right, so you can really get smoking through the mortgage process if all the expectations are set the right way. But normally a 30-day close should never get you in trouble in a decent mortgage company, okay? So I put down here 30-day close, and we have some metrics down there, and also a 21-day close, so you can kind of see what that looks like, right? But it's interesting to me that the whole mortgage process really starts off with what? The contract. I heard that. What else? Loan application. That's good. What else?
The buyer having their stuff together.
The buyer having their stuff together, right? So we're going down a list of all the stuff that calls those issues, right?
In 9 days.
Buyer, see, there we go.
You guys made a list and said this or
don't close, right? So what else? Where do you think the mortgage process really starts?
With us giving you the referral.
It really starts with the referral, right? It really, and I mean that seriously, right? Because if you look at this whole process, okay, I started day one at contract, okay? That's where I started. And I would argue with anyone that if you already have your stuff from the client before the contract, you can go way faster. It's going to be a smoother process, right? And so, so it really starts with the referral or getting the client to do the application and submit all the docs. Okay, so so that's where it starts. And you'll find as you're running around town, you'll have clients that go to big banks and that type of stuff. They're not necessarily collecting the docs, but they have the letter. So I'm going to interview Maddie right here because she deals with this every day on a daily basis. All right. So Maddie's on my team. Her number one job is speed the lead. Right. So the referral comes over. She calls. I usually call the referral. Like Leah has Savannah on our team. We'll call the referral up front, and then Maddie helps with the follow with the application. So Maddie, the referral comes over. Right. We may have a contract, we may not have a contract. What does the actual pre-qualification look like? Like, what does it look like talking to the client, and what's your first step of the process with the application?
So our first step of the process is basically whenever we get a lead over from a realtor or any of you guys, I immediately reach out. So I call them, I see if I can get a hold of them, I leave a voicemail, I will follow up via email. And in that email, we send how to apply online. And typically I try to talk to them before I send that. So they're not like, why did you email me this? Because it's a little bit easier when you can communicate with what their expectations are. And then once they get that email, typically they apply online. And then that loan application will come through and our team will reach out and start the process of taking that loan application.
Cool, perfect. So when you have a client apply online or they apply, what's the number one thing? What are the things you think is important in the pre-qualification first? What do you see in the applications? Complete applications, incomplete applications, or what's the biggest struggle with the approved?
They're never complete until we've talked to them. So typically when they do apply on their end, they've done as much as they can, but it's our job to go in and make sure that everything is correct. So we're kind of like an investigator and asking questions and trying to put the puzzle pieces together. We want to make sure that we're not leaving any holes or gaps in the picture. And then it's our job to make sure that they are having the most smooth and best process as possible. And yeah, we try to make sure that we gather docs and we talk to them and we take like a loan interview is what we call it, write our notes down to make sure that way when something pops up or we've already talked to the client that they have an idea of what's going on in that loan application. And then just, yeah, gathering information.
So write this down real fast. So there's a difference between pre-qualification and pre-approval. Okay. So if you see like, our goal is here, whether you work with us or you work with any other mortgage company, if you know that the process is going smooth, so you have a smooth closing no matter what, right? And so there's a huge difference in pre-qualification and pre-approval. What's confusing to your clients is a lot of lenders use pre-approval when it's not, okay? A pre-qualification, a client could go online to an online lender, do an application online. I'll tell you, all the big banks do it this way. All right, I'm pretty sure that Quicken does it this way, and probably USAA and Navy Fed and those type of things, right? You go online, you do an application, they fill out the information that Maddie's talking about, and a letter is automatically generated. Okay, the letter comes out, it spits out. The Wells Fargo one I read the other day, it literally says, if you read the body of the email says, "Congratulations, you're pre-qualified. Go hand this letter to your realtor and go shopping." Once you get a contract, we will investigate and review all your documents to make sure you're fully pre-approved. That's literally what the email says. Okay, so know that there's a difference. And I want you to be armed with this. That way when you talk to your clients and say, cool, that's awesome. That's a great job. You've already got a pre-qualification. Let's make sure you get all your docs into that letter. Okay, because sometimes people are just die hard. I'm going to use USA no matter what line. My grandpa used them, my dad used them, my brother used them. So make sure they get their docs to the lender. All right. What's the thing that takes the longest? How long does it take to do a pre-qualification?
A pre-qualification.
A pre-qualification. Someone applies online, you call them up, right? And you go through the application screen and verify stuff. Just real quick. How long does that take?
10, 15 minutes, just to go through whatever I have in front of me and confirm things, and verbally what you're telling me, you sound like everything's great, so.
Cool, 10 to 15 minutes, right? And then how long does it take to do a pre-approval?
It takes as long as the borrower takes typically. So sometimes if they maybe are, have more complicated income where we have to get a BOE, that pre-approval could be dependent on whenever we get that back from their job. But if the borrower has easy W-2 pay stub income and they get everything over and we can put all the pieces together, within the hour, typically, as long as they have everything uploaded, we can confirm everything, it should not take that long.
Cool, so the pre-approval can go just as fast as the client goes at the end of the day, okay? If you want to write this down, easiest clients to pre-qualify or pre-approve are
W-2, straightforward.
W-2, salary, hourly, okay? Anytime you have variable income, I want you guys to listen to us as you're showing property. Oh yeah, I'm self-employed, I own 4 businesses, okay? Going to take a while to get a complete pre-approval, okay? I'm straight commission, right? Straight commission, is that a fast one?
No.
Not a fast one, right? They have to have their docs in a row. I make $15 an hour, but I make a ton of overtime. Oil and gas is awesome, right?
Yeah.
Okay, cool. All these types of things really should be addressed up front, okay? And just know as you're going out showing clients, you'll have a lot of letters in your hand if that hasn't been validated whatsoever. Okay, they'll literally get into the contract, and a lot of these lenders are like, well, you got 21 days. It's cool. We'll figure this out in 21 days on a 25-day contract, okay, or 17-day contract. Tell me about what's the most difficult clients to work with?
The most difficult clients, I would say, are people not willing to give you the information that you need to get them qualified. They want answers up front as to what, like, hey, what do I qualify for? And it's like, okay, well, you're self-employed. I have no idea what we can use for your income. And even though sometimes they may look like they make a lot of money, we can only use what's, on their tax returns. So sometimes we come back and be like, okay, I know you want a $500,000 house, but based on your tax returns, you only qualify for a $300,000 house for a loan. So.
Right. It really is setting the client's expectation on, hey, this is a vital part of you closing fast. In this market, it's a vital piece of you winning the deal as well too, right? Because if they haven't submitted their documents, it's very hard to win the deal. Okay. Any questions for Maddie on the pre-qualification versus pre-approval? So questions? All right. So her meme, go back to that real fast. Yes, ma'am.
So when you're in the pre-approval phase of it, you've gotten their docs, do you submit to underwriting prior to it having a contract?
It's a great question.
Prior to it, we do not typically, not unless we have time or, it's a really difficult file, but for the most part, we have all of our ducks in a row. We have a team behind us.
So I think the follow-up question might be if you have if it's a straight W-2 or salary or anything of that nature, there's not a lot of reason to do that unless you just want to shorten the time frame and say, hey, let's close really fast.
Well, it's to
Which is
help
doable.
the buyer in a multi-offer situation be a strong buyer when I'm able to say, this person's already been through underwriting,
Correct, and so Salem, we'll talk to you about that later, so we do to be determined, that you can submit them upfront. The key is the buyer expectation, saying, hey, this is what we're gonna do when you don't do it upfront, makes sense? So this was Maddie's meeting starting off, Lloyd, your credit score is 470, y'all see this? Lloyd, you're telling me, Lloyd, your credit score is like 470, so you're telling me there's a chance, right? The other thing too to remember in a pre-qualification and pre-approval, be very careful. Some of you in the room are very experienced. Be very careful on pre-qualifying your clients too hard up front. There's a lot of times we've talked to clients and they're like, well, I had a realtor tell me that I probably couldn't get a loan and their credit it's never what it seems, right? Sometimes they say their credit sucks and it's bad. I'm like, dude, you got a 695, like you can get this loan all day long, right? And sometimes they say it's a 700 and it's a 595, right? So the trick in the mortgage process or the real estate process is just get them to apply. Get them to apply, set the expectation up front, say, hey, I heard you're self-employed, it's probably gonna be a lot of documents, right? But the last thing you wanna do is us go out and find a contract and we're negotiating on a 21-day close or 25-day close. And as you can see in this timeline, if you spend 5 days chasing down the documents and do the pre-qualification, it shortens the window. All right, cool deal. All right, so I want to introduce, and this is the loan officer. Who says being a loan officer is stressful? I'm 39 and I feel great. So that would be me right now. And this is Maddie starting in the business. So this is what you have to look forward to. So this is going to be me in about 2 years. Right? All right, so next to my left is Beverly Williamson. I was telling you who she is, right? So here's her meme. Please let the underwriter be in a forgiving mood today. All right. So so the loan comes in, we do the application, right? You got to run credit. That's another thing that comes up a lot of times with me and Maddie. I don't really want my credit ran. All right. I don't really want my credit ran. I know it's really good. I think I'm really good. Can you just give me a quote? All right. So just know that it's really not worth your time. It's not worth anyone's time if they don't have a credit ran. Okay. If you want to write this down, a credit score pulled within 45 days doesn't affect your credit pull. It counts as one. 45 days. 45 days, if you have pulled within 45 days, it counts as one pull. Okay. If it goes past 45 days, everything that I read, it's 3 to 5 points. Okay. So if they're telling you it's an 820 credit score, 815 credit score, 3 points isn't going to hurt you, right? Right. So know that as well too. Okay. So you have to have a credit pull, and yes, you need the documents to make sure you go out and do it. Okay. So the file comes in, we take the application, right? We chase down the documents up front. All right. If it's an easy deal with W-2s and paycheck stubs, it's about, most lenders have a way you can upload your documents. Just drag and drop. Everyone pretty much has it these days. If you have someone faxing in documents, you probably should run away from the mortgage company. All right. Most good mortgage companies have a drag and drop feature. It's 100% secure. You can drag and drop it. Okay. Maddie takes the application. She's really being an investigator, trying to look, hey, do I have 2 years employment? Do I have 2 years residence history, income, and assets? Those are the 4 parts to the loan that you have to get. Okay, and running the credit. She gets that. They go out with a pre-approval letter and go looking for houses. All right. They find a house under contract and they get a house under contract, right? One thing that all of our loan officers do here as well too is we will call the listing agent if you make an offer, especially if we have docs. We feel very comfortable calling if we have all our docs. We'll call a listing agent and tell them how good your client is. Plus, we'll send a video text. If the voicemail box is full, we'll shoot a video and we'll text it to the listing agent. They always get texts. How many of you always get texts? You always get texts. You may not always get them because you get a lot of texts, but sometimes your voicemail box is full. You'll get those video texts. Loan comes in, it's under contract, right? Oh my gosh, I got a contract for closing in 25 days. The loan goes over to Miss Beverly Williamson. I'll tell you, Bev's special gift is this. I always like to say this. We've worked together for over 10 years. She's been in the mortgage business for 25 years. All right. Her special gift is this. She makes the client feel like they're number one no matter what. There are times when it gets very hairy in the mortgage business when, oh, I just went and bought a car, or I just did this, or those tax returns I gave you, they weren't really filed. I told you they were, but they were, I mean, we see everything. They weren't really filed, and we're doing that right now. The client said, here's my tax returns. We get into it, like, oh, those weren't the ones I filed. I'm like, okay, well, we're the ones you filed.
Well, the ones they filed were more than.
Yeah, all
always more, right?
More, always way more, right? Go ahead.
Yeah.
Right, and so, Maddie's job is also, so she works from the lead coming in, all the way till you get the contract, collecting the docs, and turning it in. So whether a loan officer has an assistant or not, that's how most loan officers work. They're taking the application, they're running credit, they're meeting with the client, they're giving me estimates, right? They're giving them options, they collect the documents. Hey, I got the contract, I may update some documents, depending if you're busy, you may not. If it's a really easy file, and your salary was 100 grand, it's still 100 grand, then you turn it in the file to Miss Beverly here. So Beverly, walk us through what, and this is the fun part, right? Most of you know about pre-qualification, pre-approvals. This is the fun part, what happens after it goes off into the black hole sometimes, right? So Bev, tell me what's all involved in. To me, it's the most dynamic, one of the most dynamic positions, because if you notice, she's right in the middle of the whole process. She has to deal with prima donna loan officers. She has to deal with realtors, clients, underwriters, closers, title companies, everything. So Bev, just walk us through what process a typical file. So you get the file, just walk us through what it looks like.
I guess I'm the second eye, so I get the file and I start at the beginning and make sure the contract is correct, names, addresses, sales price, we disclosed it correctly, go back and reinvestigate the whole file again. Make sure that we get automated approval on everything that's turned in and make sure that the automated approval has the right information, the right income. We make sure that year-to-date income is correct. That, with COVID, you have to really pay attention to that to make sure that they're actually making what they think they're making year-to-date. Then we order title work, we order appraisals, we order insurance. We do have setup guys that are awesome that do all that for us. So that's all ordered before we get it. So that when it comes to our desk, we're looking to make sure that the title work is in order. There's no Schedule A requirements, Schedule C requirements to the title work. We're making sure insurance is covered, the property, and we put the file completely together. Make our borrowers crazy. Call them again and say, okay, I need some more things. I need to know what these deposits are. Again, we're just investigating the whole file again so that we can get it into the underwriter and they have a really clear picture of what's going on with the file.
Cool, perfect. So write this down. There are two types of processors. All right. We interview a lot of processors, right, Bev? There are two types. Okay. There's a type of processor that is literally just processing the file. Peter, you gave me these documents. I'm going to hit the submit button and just turn it in and not look at anything. Okay. The other type of processor, which is what Beverly is, she's basically pre-underwriting the file. She's double checking to make sure that we didn't miss anything, that me and Maddie or Crystal or Leah and loan officer didn't miss anything, right? It's going through it, making sure all the paycheck stubs are there, looking through deposits, looking through a paycheck stub to make sure there's not child support on the paycheck stub that they didn't tell us about, right? So there's two types of processors. Right. So Beth, raise your hand if that sounds like a lot. She just rattled out like 25 things that she did. Right? All right. I think the important part in this process, when you look at a 30-day close, okay, from the time you have the contract from day one, the metric, if you look in the middle, is to have your file in underwriting by day 15. Okay. Know this if you're a listing agent or if your loan is with any mortgage company, if your loan is in underwriting by day 15, you should have no issues. Whether your underwriting is 24 hours or if it's 3 or 4 days, you have time to close the loan. So that could be something along the line, Brian, as you guys are looking at all your closings and stuff. So you're like, all right, your Tuesday update calls you guys do, and you're talking to the lender. Hey, we're 15 days out. Is the file in underwriting or not? Okay. Ben also talked about something super important too. You'll have loan officers tell you that it's been underwritten. Okay. The reason that is because Maddie runs an automatic underwriting engine. I mean, we run underwriting within 20 minutes of taking the application. Okay. It's just a computer program at the end of the day. Right. And so you put the information in, you hit the button that tells you it's approved. It also tells you if there's an appraisal waiver. That's a question we get a lot of times is hey, do we need an appraisal on this? All right. So I would say 90% of all banks work this way. You might find a portfolio bank that says we'll waive the appraisal, but most 99% of the mortgage companies in our area, they literally put the information in. How do they do it? They put the information in and run the system, right?
Pretty much, yeah. I mean, their system has been it's gonna tell you what you put in it. So it's gonna go and look at credit, it's gonna look at the property address. There's a lot of engines that run in the back of it that tell it, okay, we can do a validated income if you're with the work number. And we don't even have to get income documents if your AUS is giving you a validation. If it gives you a property inspection waiver, it's gonna go off of the address that you put in there, and whatever's in that back engine, it's gonna tell you based on the whole scene of the file. If you've got a low loan to value, low debt to income ratio. But again, you still have to make sure that whatever you fed the information into the AUS system is accurate, which is what your pay stubs, your verifications of employment.
So this kind of goes back to the very beginning, when we talked about taking the loan application. The more as a realtor, you can say, listen, whatever loan officer you're talking to, make sure you tell them everything. Tell them everything and make sure your information is accurate. One of the biggest things that Beverly sees and Maddie sees is we'll get into a client and they'll apply online and they get an automatically generated email pre-qualification letter with the bank. And they come to us and we're like, okay, he says you make $8,000 a month, right? How is that paid? And that's the magic question, is how do you get paid? How does $8,000 get paid? Oh, well, I'm a salary of $3,000. I get a car allowance for $800 and the rest of it's commission or bonus. In the client's mind, they've been at the company for a long time. That's just what they get paid, okay? So it goes back to what she's saying. It's garbage in, garbage out. So you can have a loan officer say, I ran it through the automated engine. It's approved. We're through underwriting, right? But it doesn't matter if the data is not correct. Does that make sense? Right? What are some of the things when the file's in your desk? What are the typical delays, right? Like as a processor, and you can be honest. I mean, this is, you've been with us 10, 11 years, but when we get into a file, what are some of what causes delays in the mortgage process sitting in your seat? Right? We'll start off with that.
I would go along with Maddie, probably not getting your documents, not getting explanations on what the documents are, large deposits, where they come from. One of the big things is people don't disclose that they have other properties. Then the property pops up and they're like, wait, what's this? Oh, I rented that apartment for my son. Well, now we have to qualify with that apartment. So some of the other big things are insurance and title work. Your clients think, I'm going to shop for insurance, which is great. We want them to get the best insurance, but insurance at the end of the day can hold up everything. It can hold up qualification, it can hold up closing. Title work, the title companies are inundated right now. So title work has been a little bit tough to get just because everybody's busy. But then if you get title work that has some kind of weird thing on there, probate, they were in a divorce, and you have to go back and get something, then that makes it a little bit tough too. So I think at the end of the day, those things, if you can address that front and set the right expectations, then.
What are some of the delays you see with borrowers when we have files? Just in the whole timing of everything. We just went through the summertime, right? And the summertime, we love the summertime, but also it's a double-edged sword. So what do you see with vacation?
We're closing in 20 days, but I'm going to go on vacation and be gone for 10.
I'm going to tell you, how many of you have clients that they go buy a house and what do? You leave town. And they're like, no, I'm closing in 21 days. Like, you're leaving town.
I think it's just happened a lot recently, just because everybody's free right now. It's like, oh, I need to go on vacation, hurry. But no, probably the biggest thing is just your borrowers dragging their feet a little bit, thinking, oh, I'm done. I don't have to hurry. That sense of urgency is always going to be helpful. It doesn't matter if you're above, if you're 20 days ahead or if you're 5 days ahead. So.
Cool, perfect. What are some of the things that on the real estate side, the realtors can do to help make it a smooth process?
You know what? I'm telling you.
But what do you see in the delays that just coming from the real estate side?
I think that we need to make sure that we have all the amendments. If you guys are negotiating closing costs or sales price changes, or if there's even repairs. If you've got something in the contract and special provisions or amendments that is showing per the inspection on page 8, hold right there. Because if you have the inspection in there, Underwriters gonna ask for what's going on in the inspection. So those type of things to kind of be aware of what you're putting in the contract that may cause an issue at the end. Typically, if there's some typical little repairs, painting, I don't know, just little repairs that we can just get a statement from the borrower that says that the repairs were sufficient. Those kind of things, you know, we know those up front. Amendments are a really big thing, because once it gets to closing and there's a $5,000 seller credit, we don't know about it, well, then we have to change figures all over again. So those kind of things, I think.
Cool. Perfect. Chris Allen's in the room. Chris Allen's an awesome insurance agent that we work with. Chris, how long does it take to get insurance if the client was like calling you ready to go?
10 minutes.
10 minutes to get insurance, okay? I can't tell you how many times, Karen will probably chime in on this, how many times we're getting down to the closing table like, dude, we don't have insurance, or the client wants to switch insurance. They really just procrastinated and said, oh yeah, this is a great insurance company, and they get it back from USAA, it's really, really high, right? And so insurance doesn't take very long. I would probably put that in a checklist of stuff to do within the option period. We're pushing really hard during the option period, so go get your insurance, make sure it's all done. All right, so here's what I want you to do real fast. Y'all break up into your rows. I'm gonna give you 1 minute, all right? I want you to share one thing in the process between Maddie and Bev, one thing, one of your takeaways that you got in the process to make it a smoother process or something you're gonna look out for in the future. All right, give you about 1.5 minutes, 2 minutes. Should take a long time. Yes, we are. Okay. All right, let's hear some ideas before we take away.
My big takeaway was having our processor, who are our processors that are doing the file, ask that question on day 15, is it in underwriting? I don't know that we asked them.
So the key is to make sure it's in underwriting, not just automated approval. What would y'all take away?
But it's 45 days for as many inquiries, not 15, look at it.
Cool, perfect. Other takeaways? Lori, go.
Ours was just making sure that all the amendments get sent over in a timely manner, and Lawyer mentioned that on his Tuesday, I think also was asked like, hey, but then if I can call him, like, 30 documents that might be able to send over. So just documents.
Cool, perfect. Lori, y'all's table? Lori's all big takeaway at the table.
I was talking about one of them, and you just got red flags all over it. So I called the agent on first red flags. Oh, I've got some more documents. So this is, this is a pre-qualification, so 800 number. And I said the address is in the map from what. And I said, and there's another agent because I looked up that house and it's under pending. Oh, well, I've got some more, I've got, oh no, they didn't want that. And so I get the papers over, and there were red flags all over that even more. They had done a little bit further. And the very last thing it said that they couldn't verify anything because the social security numbers didn't match. So I had, I'm sure that I was really.
So it's garbage in, garbage out, right?
Yeah.
It's garbage in, garbage out. I can't tell you how many times.
But my seller rejected that, and it was probably the best buyer. out there. I just have a feeling that got.
Yeah.
But because of all these red flags,
I can tell you this happens probably once a week. If someone applies online and you get into it, you call the husband and the husband fill it out, or the wife, and you're in the consultation, you're like, this is your social security, right? You read it off to him, like, that's wrong. My social is wrong. And the wife or the husband literally put in the wrong social security for the husband or wife, right? It's very awkward when the birth date is wrong, but it's usually the social security. So, all right, so to my left, here's our introduction from Miss Sailor Berry. Underwriting conditions are like a box of chocolates, right? It's a little Fort Scott. You never know what you're gonna get inside, right? So Sailor Berry, what I love about Sailor, she started out as a loan officer assistant on Alex Camacho's team 7+ years ago, and she's worked her way up to regional underwriting manager. So she has the heart of a producer, right? Because she knows, she's like, hey, straight up, she's like, we gotta close loans, right? But she's also trying to make sure we make deadlines. So Sailor, tell us, you get the file from a Beverly, right? They're not all created like Beverly, right? But you get a file in and you're underwriting the file. Walk us through, walk the agents through what that looks like, what you're looking for, how's that process look?
Okay, so I'm gonna start with one of the, I guess, not a misconception, but it's probably not so clear what our job is as underwriters. And basically the way we look at this is we get a file and we are getting this file, which is recommended by the loan officer to be approved. So we're not there to make a decision, we're gonna deny or approve this loan. We're just gonna go ahead and make sure that we're verifying that everything that has been in this file complies with the guidelines that are set. So yes, we can verify that, yes, this is an approvable loan, let's go ahead and move forward with the transaction. So it is not our job to start looking for things that are wrong with the file. I know it may sound like it, but what we're looking for, I know. So what we're looking for is, okay, so these are our guidelines. This is what every investor is looking for. Are we meeting all of those? Because if we don't, guess what? You can close the loan, and then that loan is gonna come back to us like, hey, you are not meeting all of these requirements. There's something wrong with your loan. We're not gonna buy it from you. So that's when we have an issue. As a business, that's the one thing that you don't want to happen. And another thing, I think the worst thing is if we have to go back to our borrowers, to your buyers, saying, hey, we had an issue with the investor of your loan. They want to see more information from you. I think that's probably one of the worst experiences. They think they're done with the process and then have to go back and bother them again. So as an underwriter, we get the file. The processor has already put together all the income, assets, credit documentation, property information, appraisal, flood certification, title work. Then we look at all the other background stuff, which would be, fraud reports, social security reports, sometimes IRS transcripts, all of those things that may be a little bit in the background. And the main point for us would be make sure everything is accurate as it was described and as it was analyzed by the decision engines. And make sure that, like what they're saying, the $8,000 income is really an $8,000 base salary and not part of it commission or part of it this and that. The decision engine reads all of those things. It is not the same person that has $100,000 in the bank account as assets. If we run it, we get an approval, and then we change it because guess what, 99,000 of it came in as a gift. So if we switch that, that's a modification we have to do in the application. We put, he has this amount in his liquid assets, all of this came as a gift. We have seen loans that when we do that, now we lose an approval because it was already not a strong file maybe, and just the decision engine sees, okay, they don't have the ability to save up their own funds. So they see that as a risk. So all those things, they have to be input correctly so they can be analyzed the way that they're supposed to. And whatever is not fitting the guidelines, that's when our expertise comes in. How are we going to support that, let's say this borrower that has had 5 jobs in the past year has stable income and employment? Because that's one of the requirements. So that's when we go back and ask, hey, what happened at this job? And they give us a letter of explanation of what happened. all those dates in employment, are there any gaps in employment? That's when they go back and they have to ask the borrower all those questions. So our main goal is to verify that everything is presented accurately in the file, so it's analyzed by the system and everybody can just move on happily.
So I think it's very important, because I hear this all the time, is the underwriter denied the file. All right, the underwriter didn't like the file, okay? Our industry, I think this is every industry, is littered with people who will not be accountable, right? So if you want to take one thing away from this class, it's the loan officer's file and it's their accountability. It's never the underwriter. Is it ever, you just don't like a file and you're like, oh, I looked it up on Facebook, I don't really like this one.
We see a lot of things, I'm not gonna lie, we see a lot of things. You will be amazed of the information that a credit report and a bank statement together can give you, you know? And we can't avoid it, we see all those things, and as humans, you know, you kind of make up an idea of somebody's, you know, financial situation. But one of the hardest things, probably a good underwriter will always keep their mind, you know, shut off from all of that, you know, any kind of judgment, any kind of bad feelings, any kind of something. So whenever, let's say if I have an issue with one of Beth's files, I say, hey, I'm not seeing this, you know, your borrower is saying this, but I don't see it. Is there anything that I'm missing? You know, her credit is really bad, she doesn't have a lot of savings, we're putting her in a home that is gonna cost more than what she pays for rent. What is it that I'm not seeing? And Beth may already know the story, Maddie may know the story, you know, because she talked to them already. And maybe she went through a, you know, a very bad situation, a divorce, something. And once we put that all together, it just makes sense, you know, and we have to make sure that we have everything that it's gonna make us decide that, yes, this is a file that we know they're gonna be a loan that they're gonna be able to repay, you know. Another important thing is we cannot put borrowers in those bad situations. So when we get to a file, we look at everything and we clearly see that they're gonna be struggling repaying this loan. We are also on the hook for that. You know, they can come back and say, they put me in this house, and it has happened quite a lot. But in, you know, all those crises that we've all gone through. So it is our responsibility to make sure that we're also not fabricating something where it doesn't exist. So it's not that we don't like the file, it's just sometimes we need a little bit more to really solidify our decision that yes, they can.
So if you write this down, it comes down to communication. It's here's what Taylor's saying is she's gonna go off the guidelines, right? If it's approved, it's approved, we went through the system. It usually comes down to a loan officer or it's a loan officer, because even if Maddie takes the application, if we have a mistake, it's my fault at the end of the day, right? It's something that hasn't been communicated down the line, right? It's kind of like the house that's hard to, on harder files. It's kind of like the houses that you know they're gonna be hard to appraise, right? You just have a gut feel like, man, this was gonna be tight, right? And then it's how well you explain it to the appraiser. Here's my comps, here's how I came up with it, here's the story of why to use this comp. So I think that's the best way to kind of relate it to builders, right? It usually has to do with communication on the file, right? And if there's no communication, she's just gonna go off the guidelines, right? I will tell you this, you work with a lot of underwriters. Do y'all get, underwriters typically get a bonus on closing a file, right? Typically?
We get bonuses on reviewing files. And our incentive is not based on the approval to avoid the whole, everybody wants to approve loans, whether they, fit the guidelines or not. We get paid on reviewing files, but I will tell you this, we are extremely happy when we can review a file and then approve it and move on. It is a lot harder for every underwriter to deny a loan or to suspend a loan and having to keep working on it, until it finally goes through. And those loans are usually the ones that come
So in
back.
other words, you don't get repaid on 2 or 3 reviews,
We
correct?
don't get repaid on reviews. We get compensated, just in our work that we do, but our personal goal and incentive is always gonna be get that loan closed, because just like you guys, we want it out of our desk. We want to, the good experience, and we just want to go on to the next ones, because that's, just what we do. It's all, we have our, all our licenses or designations that we have with the government. And, you know, something goes, excuse me, something goes wrong in a file, you may lose that. So that's another thing. We don't try to just manipulate production. We just make sure that everything is done correctly and quickly, and just as much loans as we can get through, you know, the better for us, for everybody.
So you'll see different cultures in different mortgage companies, right? You know, our mortgage company is, they understand, hey, we approve loans, we close deals, the loans are coming, the loans will continue to come in, right? So she'll do a good job of reviewing it, but also like from Salah's point of view and her team, they're very production based. They understand that we have to have an open mind to work towards it.
Okay.
All right, so everyone give it up for Salah. All right, so go to the next meeting real fast. All right, so this is Karen Griffith, okay? She is the mortgage closer, all right? So how many of you here from title companies or borrowers, hey, the docs aren't a title yet? Raise your hand, you've heard that before, right? Docs aren't a title, okay? I think this is probably the most misunderstood position in the whole mortgage process. Because I get the calls all the time. Hey, we have to clear to close. Can we go ahead and close in 2 hours? Right? So there's a lot of work that goes on behind the scenes. I will say Karen's phenomenal. She has this even keel about her. She's so calm, but they do a lot. Okay, they do a lot, and really, as you can see, the momentum. You know, Nicole goes right. She goes right to contract. Right? People start putting moving trucks in place. They start packing homes. They start spending money. Right? And then appraisals in order. Then it goes to Bev. And then she feels the pressure. Oh my gosh, there's people that sold their house or are buying a house. We gotta make sure. So it all rolls downhill to the mortgage closer, right? And so they usually have a very selfless job. So I wrote on here, we had to clear to close, and you go and apply for a Kohl's credit card to save 20% on your purchase. Okay, so this is the type of stuff that she deals with. But go to the next meeting real fast. I'll tell you, mortgage closer, a good mortgage closer like Karen. Hardworking, 200%, problem solving, 100%, critical thinking, 1100%. Do you agree with that, Karen? You have to think critically, have to have a positive attitude, and you see an adequate, sweet, 0. Adequate, sweet, and total freaking badass, 1000%. So this is Karen Griffin. Karen, tell us kind of, so the file's gone through the process, it's approved, we get it cleared, the file goes back to Beverly probably to get a couple small conditions. We're clear to close, that's everyone's magic number. What all goes on in your process when you receive that file? What all has to be done?
I do want you to know that a lot of the files that I get in closing are just credit approved. I don't have clear to close yet, so that typically comes later. But I'll go ahead and review the approval, the last loan disclosures that went out, make sure everything's, you know, matches. There's no change of circumstance that needs to be redisclosed. And then I just review all docs, assets, credit, title work, property docs. You know, is there a POA? Is it closing in a trust? Is there a gift? Is there subordinate financing? Is it a bond loan? I mean, there's so many different factors that go into just ensuring that your documents are correct. And you know, as with any other job, you want to have as few revisions as possible. So I try and just be really thorough when going through everything. Do we have all the amendments we need? Is there seller credit? Is there lender credit? You know, when I get done reviewing everything, I'll send out initial figures and instructions to the title company so we can try and get that CD balanced as quickly as possible for your clients. And I prepare documents for attorney review. If there's bond docs, I'll prepare bond docs. You know, essentially, it's like Salah was saying, we're not trying to purposefully hold up anything, but sometimes, you know, there are factors that are out of our control, and we try as quickly as possible to get any problem resolved so that we can get documents to the title company ahead of time. We always want to have them there at least a day ahead of time. That's our goal, if not sooner. So
let's just say it's the unicorn and you have everything you need. You have Chris Allen's insurance in there. You have the title company stuff. Beverly made sure all the addresses match. Everything is in there. You're clear to close. You have a really good file. What's a realistic time frame in a normal workload month that would look like to get a file prepared for closing and into closing? Is it 24 hours? Is it 2 days? Is it?
No, I mean.
What does it look like? What does the work look
No,
like?
I mean, we could, you know, if we had everything when it came into closing, I mean, I could close it the same day, as long as we have cooperation from title company, you know, or it's just hard when you're going back and forth with CDs and, you know, everybody's kind of, you know, waiting on everybody sort of a deal. But I mean, if the loan's complete and it's good to go, it's very easy for me to get it in for attorney review and get it back to our audit department and get it back. Like if everything's in line and we can get a balanced CD. Oh, well, I'm sorry. No, we have to disclose 3 days ahead of time. I see what you're saying.
No,
So, like,
I was saying we've already done a CD.
Oh, okay, yeah.
We're
yeah.
clear to close,
Yeah,
we're ready to go. Hey, we're clear to close, the CD's been signed,
But
we're done. Can we move up closing? How long does it take? That's my question.
not long at all. I mean, that's just it. But a lot of time, you know, I'll get a file that's just credit approved. So we work up the loan this way. We get, you know, the CD balance this way. And then I get final approval or clear to close, and then there are changes. So we have to go back and, you know, we have to re-input. I've got to get docs redrawn from attorneys. We've got to get CD rebalanced. So there's just, you know.
So what does the CD process look like? When do y'all send over to the town? I think it's super important. Not only do you need to get an insurance company, have a good title company as well too, right? What does it look like at the CD? How early do you try to get it out there to the title company? What's been your experience? Because you work with them all over the state, right? So what does that process look like?
Our department tries, if we have to disclose within 3 days of closing, I try to have instructions to the title company 5 days out, so that we have a day or two to get the CD balance so that we can get it disclosed. Sometimes it happens within 30 minutes, and it's like, oh. And then, you know, sometimes it takes days. You know, sometimes I can't get title companies on the phone. I can't get responses via email. You know, Beverly knows, because we'll go back to the processors, like, please, like, do you have any other contact information? Is there anyone else that I can talk to? So, I mean, it could take 30 minutes, it could take 2 days.
What are the biggest delays that when the file hits your desk, what are the biggest delays that you see? Because sometimes it's like, geez, like this is not going so well. Like, what are the delays that you see?
Homeowners insurance is a big.
Does everyone write that down yet? Homeowners insurance. Take anything away. Make them get homeowners insurance during the auction period.
Surveys that need to be ordered but aren't ordered until last minute. Sometimes final inspections.
So, real fast. So here's how mortgage companies typically handle surveys. Okay, they get your file. It's a resale. They order title from the title company. Probably what, day 2, day 1 or 2 of the contract. It says, hey, you, Mr. Title Company, check out the survey. If we think there's an existing one, if you think it's acceptable, then use it. If not, you order the survey. Okay, so that it's put back on their plate. So that's another key one, Brian. Is it underwriting? Has the survey been approved? Because you cannot, if you don't have a good survey, you cannot close, right? Me and Brian, when he helped me with my lake house, we literally got to 2 days before closing, and that title company, not one that we use regular, goes, oh, there's an issue with the title, with the survey that we have. Like, are you kidding me? You've had this for 3 weeks, right? But again, I was my own loan officer, so it's probably my fault. I probably should have called that title company and said, hey, I want to make sure you reviewed it, right? So you trust people to do their jobs, but at the end of the day, I probably should have called them halfway through and said, hey, you have that survey. I want to make sure you're doing your job, right? It's when you're working with someone that you may not know very well or work with, that's probably the time you need to check the most, right?
Another big delay or another problem that we see a lot are mail outs. We don't know when we get the file into closing that it's going to be a mail out to the seller or a mail out to the buyer, or sometimes both. So title will need docs a day or 2 ahead of time, which puts us in a super time crunch, especially if we're not completely clear to close. So that's something else that's so helpful. Like if you know someone's going to be out of town, or there is a power of attorney that's going to be needed, having that in as soon as possible makes everything so much runs so much more smoothly.
Cool. And she is the numbers lady. So when you're talking about final numbers, she's going back and forth with the title company balance. You have to balance with the title company, right?
Yes.
And so
Yeah, we're really fortunate too. We have Diane and Nancy. We have two ladies that help us with balancing, so, you know.
Home
we're-
warranty
we're-
expense.
There's a bunch of us working on it all the time.
Sometimes they're waiting on home warranties as well too, picking the home, so if you're picking the home warranty at the last second as well too,
For
that
sure.
helps us sometimes as well too, right? So cool, so she does an awesome job in closing. Yes, ma'am.
Quick question about surveys. So on the contract, there's the previous survey, T47, and if that's not acceptable, then the seller will pay, and then there's the checkbox. If that's not acceptable, then the buyer or seller will pay. Whose responsibility is it to make sure that that number or that?
I have a question about that too. So typically, typically as a processor, I will get with the title company and have them order the survey once I have the appraisal, because if it falls on the buyer, you really want to know that the appraised value is going to be there. So as agents, what do you guys prefer? Because a lot of times if I'm running into a short time frame, I reach out to the title company, who reach out to the listing agent or the agent and say, hey, should we go ahead and order this? So what do you guys prefer?
So it depends on if you're representing the buyer or the seller, right? I represent buyers mainly right now,
Right.
and I always check that. Even if they've uploaded the survey, uploaded the T47 and documents, I can see that, I still check that. And then to make my offer stronger, I'll check that the buyer's going to pay it.
Correct.
But the first one, the line right before that says the seller's going to pay it. So first it should go to seller, and then if that one's not acceptable in the title, then my buyer will pay for it.
Gotcha. So, we're always on top of getting the survey in T47 because that's a requirement, that's an approval condition. If it's a new survey, we'll reach out to the title company when the appraisal is received and it's net value to order it. So that's kind of the.
And then,
Yeah.
and then the fees.
Absolutely.
I have it on my.
I always, if it's.
Personally, I think our buyers have to have skin in the game. You can't wait. You can't wait, and the same thing with, with the appraisal or what have you. I set the expectation up front. That's gonna be important.
So Brian, I agree with you there. That's why I was asking what you guys' thoughts were.
So
We order the appraisals on every file, right out of the gate, just because we want to make sure we're ahead of the game.
Yeah.
So I feel like the survey should be done, so we charge the buyer, we show a survey fee on every file, whether it says they can use the old one or not, and we can always remove it. But it's already there, so the buyer knows that dollar amount's
So I'll tell you this, if you're gonna refer a loan to us, I know me and Leah and Peter, and everyone feels like you're referring it to us to take great care of your client and to close on time, right? That's really what you're referring to us, and to close on time. And so the more you can put it into a place where it's a system and you don't forget about the survey or you're too late to process, I would tell you, in our opinion, I put it on the title company. It needs to be ordered as soon as possible. If the contract says whoever's gonna pay for it, that's the contract, they're gonna have to want to pay for it one way, someone's gonna pay for it.
Right.
But when you start waiting for a survey, shoot, that survey we had in Conroe was 2.5 weeks.
Yeah.
And you waited 2 days, I paid $2,000 for a survey to get it 4 days.
So acreage.
I wasn't gonna close, I was not gonna close on time, and I was not gonna miss my closing. Does that make sense?
Because cost.
Yeah, acreage is definitely.
So you sort of want to know who is paying for
Right,
that
that's why-
acreage deal.
I'd be very careful.
Asking you about if, when you're talking about a property, yeah, it could be $500, but it could be $2,000, and those little fees here, there start adding up.
Correct, but what I find is if you have any takeaway from this process going through here, our idea is that the file comes in and it's like a race car. All right, that actually when you get a contract, she's already ordered the appraisal. We're not waiting for it to get the file setup's going on, the title work's being ordered, so it all rolls in, it's being worked on, right? If you can see this process, we counted one day and it was like, how many people actually touch a real estate transaction? Anybody want to guess? Like how many different people touch a file? From realtors, surveyors, title companies, mortgage guys, insurance guys, anyone want to guess? I think I got like 62. 62 people, different people touch it. You talk about escrow officer, then there's an escrow assistant. Then there's, a lot of people touch the file. So the delays, and if you want to go fast, I do believe going into this next market, we're gonna have to go fast. Okay? We're gonna have to go faster, right? We're gonna have to go faster than 30 days, right? But you'll see that when there's delays, when you're not closing on time, it's when the loan got stuck in the process somewhere. That's why I asked, Bev, what are your delays? Sailor, what are your delays? What are your delays? It's when the file sits around. If your file's sitting, good luck closing it in 30 days, much less 20. Does that make sense? So go back to your process and just say, okay, how can I make this? I 100% agree that people need to have skin in the game. You know, it's just the cost of buying the house. There's an inspection, there's a survey, there's an appraisal. Well, that's it. Cool. Yes, ma'am.
Can you touch a little bit on the third party financing paragraph 2A and B? So if I have a client and I'm gonna pick as a listing agent or a buyer agent, it doesn't matter.
Mhm.
In this market, I want to get my client under contract, whichever way. So on a paragraph 2A, if I have a client that I told them exactly what they need to do, they give me all their business. I don't see a point putting 21 days.
I would say ask your broker. I mean, 21, what are you asking me? Are you asking me?
No, I'm asking for approval, financing approval. So in third party financing, paragraph 2A says X amount of day, that's the buyer approval.
Right.
Where paragraph B is the property approval. So if you already collected all the documents,
I would say this, if I have all the documents, if Brian says we have all the documents,
Right.
it's a W-2 employee. So
right?
it's an easy file. I have it, I've looked at it, I don't need 21 days for that. I have it on the record. So yeah, so
Right,
just.
that's what I'm
follow the
saying.
officer.
So what would be the number
Self-employed?
that would make you
Self-employed,
comfortable?
the days,
Yes,
case per case basis.
all right,
Lee, would you say the same thing, case by case?
Yes.
And not every, if I said, hey, 21 days for everyone, I got a guy who has 5 companies, he has 4 K1s, like, oh, I'll need 21 days. Okay, they're buying a $2 million house, those guys are typically never simple. The only ones that are simple are the doctors, and you get the doctors, they all own 3 different partnerships. Okay, just that's how it is. The more money you have, the more businesses you have.
so if I'm a listing agent and I get an offer and there's 21 days of third party financing, and I get a pre-approval and I talk to the lender, has all boxes checked and you collected all documents, I'm gonna question that 21 days.
That's fine. I would talk to a little officer and see how you feel comfortable with it. So that type of stuff, you guys call us, you call your lender, probably depends on who the lender is, if they're gonna be honest with you as well too, right? So there's always 2 different.
Well, if you do that ahead, if you do the pre-approval ahead, then you guys have that conversation. What do you think when I'm gonna submit an offer?
I've told agents, I don't need it 21 days at all, put 0 for all I care. They're excellent, they make $300,000 a year, they're putting 20% down, I have all the documents, don't put anything. Okay, so it's case by case basis, for sure. We want to help you guys win the deal, but on the flip side of it, if it's someone you don't know, right, you also want to make sure you're.
Right.
doing those ones, yeah. So I think we're almost past time. Yes, sir, Mr. Mike?
I did have. On the appraisal, when you get that, who reviews it to see if this is really real? Because some of them, this day and age, they can be all, that thing up there that said, you should set appraisals. I like a box of chocolate, because they're crazy. Yeah, and you, because you do this all the time, if you see what it looks like, this is nuts, this doesn't right. And you question that, say, hey, wait a minute, we aren't gonna accept this. Before, the point is, and then, oh, well, now it is, now you gotta wait 4 months to get it, so it's done there.
Oh, that's it.
For a bad appraisal.
Sayla, you know, I don't feel like we submit files after they're appraised, and Sayla comes back and says, I don't like the appraisal.
No, we also have a little bit of safeguards on that. You know, the decision engine gives us feedback on those, on the property itself. That's why, how Bev was saying, it's important to put the correct address. It gives us feedback on that. So to the point that it tells you the comparable sales around. So we can see that. We have also fraud guard reports, which is, you know, fraud information, checklist, alerts, all that kind of stuff. It touches on the property as well, the market, any foreclosure activity, all of that. We also have, here in Cherry Creek, we have an appraisal team. And what they do is they do a quality review of the appraisal. Do they have enough pumps in it? Do they have comparable properties? They also look at the decision engine and say, hey, according to the decision engine, there's another property that may be closer to your subject and you're not including in the report. So by the time that we get an appraisal released to us, it has already been audited, and sometimes it has been back and forth with the appraiser to get it all situated.
It gets cleaned up.
And then once an underwriter checks the appraisal, we just make sure everything is correct. We have seen sometimes that the appraisal has a completely wrong legal description, nobody noticed it. Square footage, acreage, sometimes they did the appraisal on 2 lots, and guess what? The contract only says 1 lot, and then we have to take a look at that situation. So there's a lot of things that we review in there that usually by the time that we get the appraisal reports, they have it scrubbed already. And if they're having issues getting comps, they have already communicated that with the appraiser to go ahead and make sure that they have all that is information that we need.
Yeah, we don't, Mike, we don't usually see, if one of our appraisers on our team does the appraisal, it's usually way up front in the process, so it's not usually back of it. But I will tell you this on jumbo financing, so if you're borrowing over $1.5 million, definitely over $1 million, I think, but $1.5 million is kind of a kicker with us. I think a lot of banks is they want to start seeing second views from underwriters and stuff like that. So the bigger the property, usually the less the comps, right? The more complicated and more customized the house. So I would tell you that if they're borrowing over $1.5 million on a loan, I mean, you could have another appraiser review or something of that nature. So that happens from time to time.
Another surprise on appraisers is when they contact you to set the appointment, the people might be afraid that COVID's coming back and they don't want it. So they just go ahead and do a drive-by. They don't tell anybody, but now you have a drive-by appraisal that comes in off and you got to go back through and rework it.
So I think here's a big thing with appraisal. So we're talking about making sure you close on time or close faster, or if you're working with another mortgage company, I want to make sure this is a smooth process for my clients. That's the number one thing with the class, is make sure the appraisal is ordered right away. Because if you look at this timeline, right? If you look at the timeline that we put together for you to close in 21 days, all right, it's 15 business days, all right? Look out for holidays, all right? Most people they don't take into account Labor Day, they don't take into account 4th of July, right? And closings on Mondays are awesome or sucking. Okay, closing on Mondays just suck, and here's why. You lose 2 or 3 days. You have a closing date on a Monday, you have to be done with it on Friday. Right, and then you wrote the contract on the weekend, so you literally had 30 days. You just lost 5 or 6 days, so it really shortens the weekend, shortens the time frame, right? And then make sure your appraisals are ordered right away because they are taking. Like we could close in 21 days all day long, but if the appraisal is going to take 2 weeks, you're getting it the week of closing, and that's not a good experience for anybody. So that's something we look at when we're managing the process too. So raise your hand if that helped out a little bit. All right, everyone, give it up for the team here. Fast. Our newest junior underwriter is in the back, it's actually Griffin. She's been promoted to junior underwriter. She's been a loan officer assistant for us for over 5 years. She's done a fantastic job. She's done pretty much everything you can do. She's processed the last couple of months. She is joining Sayla's team and growing. She's going to be a junior underwriter helping us out. I'm going to give her some props. Make sure you fill out your surveys. Thank you so much for coming. I hope this is a little bit different class than we teach. We usually do sell, right? How to generate leads. I thought super important to give it back to you guys. So I hope you had 1 or 2 takeaways. You'll have an awesome day. Go crush it.
Thank you, guys.